My name is Ted Harris, and I'm with the Pennsylvania Petroleum Association. I'd like to welcome you to our monthly webinar series. Before I introduce Daniel, I would just want to share with you, please ask questions during the presentation if one pops up. What we'll do at the end is I will ask those questions to Daniel, and he can hopefully answer them directly, or he can give you an answer after the fact. But in order to do this, there's a question feature on your GoToWebinar panel, and essentially what you would just do is type into that question section, and we'll see it from our end, and like I said, we will ask them after the fact. You will be muted throughout the presentation, so the only people that are able to talk is Daniel and myself. So again, please ask questions if they come up. At this point, I would like to introduce Daniel Dowdy. Daniel is an account executive with Federated Insurance. The name of this month's presentation is Workers' Compensation, Managed Risk, or Unnecessary Profit Leak. And at this point, I'd like to pass it off to Daniel to get started on your end.
Thank you, Ted. Good morning, everyone. I hope that you've had a great start to your new year in 2019 so far, and looking forward to sharing with you about 20, 30 minutes on workers' compensation and some strategies that we can work on together. Your insurance partner can work on with you, as well as we can go through this morning on some different techniques that we can do to prevent workers' comp claims, and then also help reduce premium cost for you and your business as well. So we'll walk through a couple of different strategies to go through that this morning. So on our agenda, we'll work through what your workers' comp experience mod or modifier is. We'll talk about some different techniques on your deductibles that you can use on your workers' compensation. We'll talk a little bit about medical-only claims, and then having a managed care network and how that can be beneficial for your business as well. So just getting started, we'll talk a little bit about some best practices in owning your workers' compensation, and how to decrease your cost for your business. So one question that we typically ask is, have you taken ownership of that experience modifier at your business? And do you understand what your experience modifier is and what your experience mod is? So Pennsylvania is a little different than many of the workers' comp states in the country, in that it has its own workers' comp bureau. So it has a specific program in place for the state and does not follow NCCI. So you'll hear me reference this morning NCCI, and that is going to be more of a national program, but Pennsylvania has its own specific program for workers' compensation. So not every state's created equal. Workers' comp in Pennsylvania is just a little bit different, but we'll walk through a couple of different things on that as well. But I'll start by saying this: workers' comp is not a commodity. Many people treat it as a commodity, but there are many, many different factors that you should look at when you're looking at your workers' compensation carrier, to make sure that the claims are paid effectively and quickly and on time, and everything runs as a smooth process. You'll take a look at the financial stability of the company. You want a knowledgeable sales force that's obviously going to be able to help you when it comes time to use your workers' compensation, or if you have questions beforehand. You'll want to make sure you have the support from a claims staff that can help you walk through those claims, as well as you want to make sure you have the right coverage and products for your business, and the right people behind the scenes too, your nurses and your claims adjusters, to consult with you on that. And then, of course, God forbid, let's hope it never happens, but if workers' comp fraud does happen in your business, you want to make sure you have the right people to investigate those types of claims. Let's walk through your experience mod, and it is specific to each business. Each business has their own specific experience mod that they've earned over a time period, and it can provide debits or credits to your business in terms of the cost of the workers' compensation and how that affects your premium each year. And losses do leave a lasting impression and can really affect you for many, many years to come. And one thing that I'll always bring up, and I'll bring it up probably several times today, frequency matters more than severity. So what I mean by that is if you have one claim that's a larger claim, it's going to affect you less than having similar smaller claims throughout the year. Frequency breeds severity, but frequency matters well more into your experience mod than severity. We'll also talk a little bit about your medical claims and indemnity claims, and then not so much of an effect in Pennsylvania, but your deductible. There are certain states that are net states. Pennsylvania is a gross state, so we'll talk about what that means in a little bit as well. And your experience mod can be managed. It's one thing that you can manage on a year-to-year basis to decrease the cost of your insurance premium. So let's talk a little bit on an example standpoint on your experience mod and credits and debits that you can get. So let's look at Company A here and their experience mod. It's a 1.0. And what that means is the insurance industry and in Pennsylvania puts that experience mod, and a 1.0 is flat, meaning that you are an average risk for the insurance company. 1.0 is going to be the baseline for everyone when they're getting started, and that shows your premium there as Company A has $50,000 premium. A 7.5 is a much better experience mod for the business, and that means they rarely, if ever, have any claims. You can see what that does to the premium there as we step down in the experience mod. Now, if that experience mod jumps up to a 1.25 after severity or frequency of claims, you'll see that the premium does go up there pretty significant compared to someone who's in the middle with a 0.75 experience mod. Your experience mod does have a timeline and a structure for when your experience mod gets locked in. It's going to be the 3 previous years before last year. So let's use this year, 2019, as an example here. You'll see 2017 on the board. I'll go ahead and use 2019. 2019 current policy year means 2018 will not be 2018's workers' comp losses will not impact your experience mod, but 2017, 2016, and 2015's will. So that is when your experience mod gets set each and every time that it gets set for a 3-year window there of the previous 3 years, not including the current policy year or last year. That's what affects your experience mod and your premium going forward. Let's talk a little bit more. I alluded to it earlier on frequency versus severity, and we'll talk a little bit about why the frequency is more important and can cost you more than severity of claims. Let's take a look at a little bit of an example here. As you'll see, there's on the screen there's a $75,000 base premium for the account that we have listed here. This account had 5 claims at $10,000 apiece, which brings it to a 1.16 experience mod, and that jumps that premium from $75,000 up to $87,000 in premium there for the year for this account. We look at a different account. They have the same $75,000 base on their workers' compensation cost. They have 1 claim at $50,000. So you'll see from before we have 5 claims at $10,000. Now we have 1 claim at $50,000. So the same amount's paid out, but this one just has the 1 claim at $50,000. They, instead of a 1.16 experience mod, have a 0.90 experience mod, and so therefore their premium is actually going down to $67,500. So they have significant premium savings, whereas the other business with 5 claims at $10,000 apiece ended up having to pay much, much more, and in that scenario, almost $20,000 more on their workers' compensation due to the frequency of their claims. The 30% difference. That could be a big difference for many businesses out there when you're looking at cost of your workers' compensation year in and year out. So I'll hit on this briefly. There are differences across states, as I mentioned before. There are a few states out there that are called net states. So if you operate in any of these states, net states just allows you to have a deductible on your workers' compensation, and with that deductible, any workers' comp claim under that deductible would not affect your experience modifier. Now, Pennsylvania is a gross state, so there's no real advantage there on that side of things, but you do have some premium savings if you decide to take a deductible on your workers' compensation. So it doesn't shield you like a net state with the deductible, but your deductible here can actually help have less claims for your business if you can get some buy-in and a little more skin in the game for your business there. So it can decrease your cost as well. Like I stated before, there is some premium savings there for your business. So there is a big debate on this one, but medical-only claims really can limit your exposure and your true cost and the impact that a workers' comp claim can have on your experience mod year in and year out. And many different states are different on this one. Pennsylvania is different on this one as well. So not a huge reduction if it's a medical-only claim, but the time away from your business can really impact how it goes into your experience mod. So let's look at a little case study here. Employee has a $1,000 MRI. The employee continues to work, and the $1,000 cost is calculated as just a $300 expense on their experience mod for workers' compensation. That's due to the employee just having a medical-only claim. If the employee has a lost time payment for missing work due to the injury, a $1,000 cost is directly placed into the experience mod calculation along with the lost time wages. So example one, your business is getting out with only a $300 hit on your experience mod for your workers' compensation. Example two, with the lost time, the employee is no longer able to work. He's missing time away from work. $1,000 cost is directly placed plus the wages that the employee missed. So it can definitely have a big impact on your business if you can push this to a medical-only claim and not have any lost time from your employee leaving and not being able to go to work. So some other factors and some other ways that we can help reduce cost of workers' compensation would be to report your injuries. I would say for best practices, 72 hours is a good time frame to make sure that you notify your insurance company to report the claim, fill out your first report of injury forms. But if you can get it within 24 hours, typically we can reduce the cost of the claim significantly because we catch things early. So we can decide on different tactics to decrease the amount of time lost by the employee and many other different ways that we can reduce that. We'll talk a little bit about that reporting. We'll talk about light duty, modified duty, and how important that one is. We'll talk a little bit about providers with occupational focus and a little bit on the drug-free workplace here as well in this portion. So 70% of work comp claims reported within 7 days of injury is Federated's goal company-wide. And a little bit on our results, just to give you an example, per claim average shows claims reported late paid 25 to 50% more than promptly reported claims. So this is from a couple of years ago, but you can see that if a claim is paid late, typically the average claim goes up. These costs and the experience mod factor increase for your business increases 25 to 50% on those later claims that were reported later. So some benefits to that. It allows you to some benefits to reporting quickly. It allows you the opportunity to interview witnesses, secure some evidence. It allows for some direction of medical care to in-network facilities specializing in work comp modified duty. And what that means is getting the people to the right location that specialize in workers' comp type claims. And it really helps our claims department get things tidied up quickly so that we can help this from ballooning out. We can promptly file forms and allow for drug testing quickly to reduce the elimination of any kind of claims exposure there if the employee was under the use of any types of drugs or alcohol while they were injured. On a modified duty program or light duty type program, it's a wonderful way to save cost for your business because the employee is coming back to work. Rather than sitting at home watching television attorneys tell them how they should be paid more because they had a workers' comp claim. If you can get your employee to come in to do any kind of light duty or modified duty work, which is, answering the phone, filing things, whatever their injury will allow them to do, this can be a wonderful program to keep your employee from, for one, having lost time wages, which will affect your experience mod, and for two, like I mentioned before, the employee is not sitting at home or talking to attorneys or hearing from attorneys telling them that they should be paid more from their injury and that they should sue. So great program there in terms of a return to work program. Your insurance company can provide different areas to help there as well. Talk about that a little bit. And there's some benefit to the employee as well. It helps reduce concern about financial uncertainty and job security if you bring them in. And it helps them have less of helps them maintain a sense of attachment with their coworkers and can provide some recovery time and just some benefit from that on their quality of life. One thing I would say in terms of modified duty that you want to consider is make sure you're talking to the employee to make sure that they can perform the work that you're providing to them, as well as make sure that they have been released by their doctor to do light duty programs. And you want to have this in your handbook as well as something that an employee signs off on when they begin working with you to have that in place in terms of a return to work program or a light duty program. You'll also want to look at your workers' compensation and make sure you know the network that your workers' comp uses, and make sure you're directing your employees to the right hospitals when they go. And here's something from the Journal of Workers' Compensation. When employers did recommend healthcare providers, injured workers followed their recommendation 92% of the time. So you want to go to the people that your insurance company has suggested and stated that would be the best fit to take someone to if they have a claim, because it can reduce the cost, and they understand how workers' compensation can affect your business, and it allows you to manage that claim a little bit better before it balloons out. We'll talk a little bit here now about DrugFree Workplace. It's a difficult thing to get in Pennsylvania, but if you can get this, and I would work with your insurance agent on this, you can receive some significant premium savings in the amount of up to 5% by having your DrugFree Workplace program in place. I would suggest meeting with your local agent or representative from your insurance company to ask them about a drug-free workplace program and how you could put that in place at your business to potentially save some money. Now, like I stated before, there are several different steps and hoops to jump through to get to this drug-free workplace program. I'm not going to hit on them too much this morning, just because it's going to be in-depth and detailed for each business separately. but do make sure you chat with your agent or provider about a drug-free workplace program that you can put into your business risk management program. So here's a couple of claim scenarios. In Delaware, a 26-year-old tech, emergency transport for knee injury, morphine and heroin in the system, claim denied with no dispute. In Idaho, a 26-year-old with back pain from stacking product, marijuana in their system, they were terminated. Medical covered under workers' comp, no lost time benefits paid. That saves that business a ton of money. In Tennessee, a 36-year-old with bleach chemicals in their eye, drug screen, he refused to cooperate. The employee voluntarily terminated themselves. The claim was denied with no dispute. So as you can see, a lot of these scenarios here, if there were drugs or alcohol in their system, it really does make an impact on your workers' compensation loss because the claim was denied. The employee was on their own because they had chosen to take illegal substances and work, knowing that that was against their company's policy. So 38 to 50% of all work comp claims are related to substance abuse in the workplace. Unfortunately, that is the fact that we are having to live with right now. It's all about knowing your employees as best as possible and making sure you notice small changes that could represent any kind of drugs or alcohol in their system, and make sure you have the right policies in place ahead of time on drugs and alcohol use in the workplace. Make sure your employees are signing the handbook that says that they will not use those. Important to have that process in place. And substance abusers file 3 to 5 times more workers' comp claims. Again, staggering numbers here on workers' compensation and the usage. Nearly 75% of all adult illicit drug users are employed, as are most binge and heavy alcohol users. So these people are in your workplace. Hopefully not in your particular workplace, but they are in the workforce in the United States right now. So as I mentioned earlier, there are some schedule credits for your workers' compensation, and what a schedule credit is the ability for an insurer, like Federated, to have to reduce your cost if you have some of these programs in place. Like I said, there are certain insurance companies that in the state of Pennsylvania that can get up to 5% schedule credit for your workers' compensation if you have a drug-free workplace program in place, which can obviously reduce your cost on your workers' compensation premium going forward. Talk a little bit about your claims management here, just switching gears a little bit. You want to make sure that everybody's on the same page here. You want to make sure your injured worker, your business owner, your adjuster, nurses, medical bill processing, and providers are all on the same page, and that there's good communication between the group. This can allow for a seamless transition if you do have a claim. And an unmanaged claim, an employee is self-treating. They're not going to the doctor. They're not reporting things on time. They're not going through a drug screen, which could potentially end that claim. And there's options for direction of care are now limited, so they can't fix this problem as easily as they could have if they would have the employee would have notified their employer and had the ability to manage this claim properly. There's some other things. The physician approves a return to work with restrictions. The employer won't accommodate the restrictions, so if you don't have any communication on your return to work program and your employer, you as the owner or manager, doesn't accommodate the return to work program, this claim can continue to get out of hand, and the claim drags on, and it continues to hurt you for years to come. But if it's managed correctly, the claim closes out in a prompt period, and you can move on with your business. Here's a little example of an unmanaged claim versus a managed claim, and you can see there some of the different areas that can help you reduce that cost. Your in-network treatment means going to the right doctors that your workers' comp provider gives to you. There's no lost wages because the employee returned to work and had a light duty return to work program or a modified duty program, and it was only a medical claim. So in this scenario, one company's unmanaged claim comes out to $10,400 versus the other one with a great managed claim at $900. Before I jump into a little bit on the safety committee side of things, which is another aspect that can help you save some money on your workers' comp premium, I'll wait for Ted if anybody has any questions at the end. Please let me know, and I will switch gears a little bit towards the Certified Safety Committee program.
Daniel, we have not gotten anything in yet, but again, anyone, if you do have a question, please ask it through the question chat feature.
Perfect. So I will talk now a little bit about a certified safety committee program that you can put in your business. This is special for Pennsylvania and can really help you your business out when it comes to cutting costs on your workers' compensation program. This is also, as I mentioned before, on your DrugFree Workplace program. This can also save you 5% on your workers' compensation. There are several steps that need to be taken before this can be put in place, so I suggest you work with your provider of workers' compensation to help set this program up for you. But it is, like I stated before, something that can save you some money. So if you put in Pennsylvania, you can declare a safety committee and you can get it certified. And what a safety committee would be a group of people in your business that discusses once a month, and you have to have a quorum on your committee, safety within the business. So to get things started, your committee must be in existence and operating for a full 6 months, calendar months, prior to signing and dating the submission for the application. So if you want to apply for this, you're going to have to start early beforehand, and you must be meeting 6 months in advance before you can actually submit the application. And this is a relatively well-documented meeting will help this program move through for your business as well. And like I stated before, you must have a quorum of committee members that meet each month, and the application must be received between 90 and 30 calendar days in advance of your next renewal for your workers' compensation program. So it's got to go in at least a month before your renewal date of your workers' compensation. One thing to note here, it's got to have at least 4 people to meet a safety committee program requirements for your business. 2 of them have to be employer representatives, meaning it would be your officers of your business, and 2 must be employee representatives that could be foremen or any of your managers that you have. Typically, we see at Federated, we see at least one of those being a driver or someone that delivers, just so they can get a good base for the rest of the business. They've got a good idea on the safety and morale of the employees around them. So got to have at least 4. 2 of them have to be employer represented, and a minimum of 2 of them have to be employee representatives. And it doesn't have to be just 4. You can have more than that. And I would suggest having more than that. It really does help ease the process when you have 6 or 7 people. That just looks better for your case when you're applying for this program. And they must be trained by a qualified trainer in safety committee operation, hazard inspection, and accident investigation prior to submitting the application. So you would want to get with your workers' compensation provider on this one as well, that can help out and get that process started, and help on the training basis and get everybody certified. And as I stated before, I think committees must meet monthly, keeping meeting agendas, attendance list, and meeting minutes. So you'll need to put together an agenda for each month, attendance list for those that were there to make sure you have your quorum, and your meeting minutes, because they're going to ask for this in the application process. for the past 6 months or longer that shows that you had this in place. And as I stated before, your committee membership should represent all the primary operations of the workplace. So if you have a driver, a deliverer, if you have someone in the office, you should have at least one person of representation available for each of these. And this is actually renewable every year as well, and you have to submit this every year between 90 and 15 days in advance of your workers' comp policy, or it will not be allowed with the state. So make sure after you have this program in place and you're receiving your 5% discount and you want to continue this going forward, you'll want to make sure you're applying for this every year, at least at the bare minimum 15 days in advance. I would always say 45 days before your renewal is a good time period there. That'll be the end of my presentation this morning. I appreciate everyone's attendance. Hope that helps a little bit in terms of understanding what your workers' compensation is and setting up some different parameters to help with your cost on workers' compensation, as well as preventing claims and what to do if you do have those claims. So I'll turn it back over to Ted.
Daniel, thank you very much. We did get a question in. It's a long one, so stick with me here. Again, if anyone else has a question, please feel free to ask it. You spoke a lot about substance abuse in the workplace and eventually leading to increased workers' comp claims. What is your recommendation specific to compensation or non-compensation for employers who may find illegal substances on the premises? Our policy prohibits substances on the premises, but does not specifically outline what steps the employer will take or not take specific to compensating them.
So,
compensating them.
Yep. So, in terms of compensation for the employee, is that what we're asking here? If drugs are found? Perfect. Got the question in front of me. I would definitely put something like that into your employee handbook. I'll read the question again. It's talking about specific to confiscation or non-confiscation of employees that may find illegal substance on the premises. I would make sure that with your plan in place and with your employee handbook that your employee signs, I would put a little caveat in there about the drug testing program. I would put something in there about confiscation of illegal substances on the premises.
Excellent. Is there anything else before we wrap up here? All right. Well, Daniel, thank you very much for your time. We appreciate it. Our next webinar will be the first Tuesday of February. Thank you everyone for your time today. And again, Daniel, thank you very much.
Thank you all. Have a wonderful day.